Hello, good morning. It's Monday the 15th. I'm FX Blue and this is the market brief. There is growing optimism that the UK economy may perform all right going forwards. Yes, unemployment is still a bit of a concern, but an important difference to most other recessions is that this time around there's a huge pile-up of pent-up demand, and that should flood through and fuel growth once the lockdowns are lifted. And that logic applies to all the sectors of the economy, not just the pubs. With the vaccinations, we've passed 15 million, an important milestone by the 15th. That puts the UK way out in front of the other G7 economies. And naturally now the pressure is growing for the government to start a phased reduction in these restrictions. And indeed Boris has committed that he'll roll out a roadmap for lifting lockdown next Monday on the 22nd. So is the end in sight? Certainly looks like we might get back to something resembling normality sometime in the next few months at least. The cherry on top was a 1% rise in Q4 GDP. It didn't get nearly enough attention in the headlines, but it has served to further support sterling. We saw 138.65 against the dollar, which is the highest close since April 2018. And this shifts the focus back to targeting the 140 level against the dollar. Over in the US, Trump was acquitted. Not quite the outcome many were hoping for, but at least Congress can now get back to work on that 1.9 trillion stimulus package, which is due to be debated in the House. Concern remains that inflation is set to explode higher, certainly with that stimulus package. But with unemployment close to 7% stateside, until we start to see a marked improvement in the new jobs reported on Non-Farm Friday, that demand probably won't outstrip supply in many areas of the economy. That means that inflationary pressure should remain relatively limited. Well, that's the theory, anyway. Economics 101. In the Eurozone, Mario Draghi was confirmed as the Italian Prime Minister this weekend. Well done him. He'll have his work cut out to repair a nation that is a little, more than a little, troubled by unemployment and sports the worst debt to GDP ratio in the EU. Apart from Greece, of course. But if anyone can, they don't call him Super Mario for nothing. Euro dollar touched 121.50, but we are beginning to see a series of lower highs. So there are growing calls in the market that a sustained break below the 120 mark could be on the cards. That's one to watch for sure. Right, that's it from me. Hopefully it'll dry up. I'll be back on the air wheel tomorrow. Do join me again.
If you do not have a clue, then just tweet through and ask FX Blue.